Assalamualaikum. My name is Abir Fatma, and I, along with my group members Maham Javed, Nisba Mazhar, Aman Durrani, and Hamza Siddiqui, will be presenting on the topic export of depreciable assets and passenger transport vehicle. Now, here's an interesting fact for you all. Did you know that in Pakistan, the exports of goods and services during November 2019 increased by 9.6% to $2.02 billion, while imports declined by 17.53% to $3.815 billion. Now, moving on to the exporting of goods. Exporting is basically an economic transfer. Businesses that sell their goods or services to customers in other countries can either sell new products or already used products, such as machinery. In case of already used goods or machinery, it is important to look into the treatment of gain and loss of these depreciable assets. Now, Misbah will further look into this.
Coming towards the methods of calculating gains or loss on disposal. When we're transferring an asset, our depreciation is taken as our gain. Moving forward, the cost of an asset takes in consideration of all the items that can be attributed to its purchase and put an asset to use. However, when we come towards the written down value, it is the depreciated value of an asset for the purpose of taxation. A few points to note when you calculate the gain or loss on disposal of an assets are to use the original cost, using the cost of an asset rather than the amount that is received at disposal. Then keeping that in mind, when calculating gain or loss on disposal of an asset, we subtract the written down value from the cost of an asset. This is how we calculate gain or loss. Lastly, the amount received while reporting the asset more or less is irrelevant in such cases. We do not consider it. The only amount to be considered is the cost or the written down value. Aman will carry forward with an example.
Assalamu alaikum everyone. So before I continue with the example to further explain this concept, I'd like to refresh your concept. For that, gain on disposal is equal to depreciation allowed for the assets that are exported. Moreover, the written down value, we can calculate the written down value by simply subtracting the accumulated depreciation out of cost. Or if we want to find the depreciation amount, we can subtract the written down value from cost. The consideration received is basically the amount that you receive on selling an asset. Moreover, according to tax authorities, we assume that the value of sale proceeds and consideration amount are equal to the cost of the asset. Moving to the next slide. So this is an example. During the year 2019, Mr. Asad exported the machinery after use in Pakistan. Here we are given two cases. In both the cases, we have the same amount of cost and the written down value, whereas the sale proceeds in one of the case is less than cost of machinery, and in the other case it is greater than cost of the machinery. The requirement is calculate the tax gain or loss on disposal of above assets for both the cases. As you all know that according to tax authorities, we assume that the sale proceeds value is equal to cost. So the cost value will be seen in both the solutions. And as we subtract the written down value, we get the gain that is 3 million, which is similar in both solutions. Moving to the practice question. Following transaction pertains to Raznak Private Limited, which took place during tax year 2019. A printing machine costing to rupees 6 million being used in Raznak Karachi factory was transferred to its subsidiary in Switzerland. The fair market value and tax written down value of the machine on date of transfer was rupees 8.5 million and 250,000 respectively. And here we have to find the gain and loss on the export of the asset. And as you know, that gain or loss is equal to the depreciation allowed. for which we have to subtract the value of written down. We have to subtract the written down value out of the cost of sales consideration. For that, we know that the cost of the machinery or sales consideration received was 6 million, and the tax written down value was 250,000. By subtracting these value, we get the gain on disposal, that is 5,750,000. Thank you. And now moving forward, Mahan will continue.
Okay, now coming down to the disposal of passenger transport. Passenger transport vehicle depreciable cost should not exceed 25 lakh. If, for example, the total cost of the passenger transport vehicle is 70 lakh, if we have to calculate the depreciation for the disposal of passenger transport, we'll take into account 25 lakh instead of 70 lakh. Moving on, if we look into the consideration received on disposal, in order to calculate the gain or loss on passenger transport, we use a formula which is A into B divided by C. In this formula, A denotes the disposal proceeds, whereas B is the cost of asset for taxation, and lastly, C is the actual cost of asset. Now, Hamza will continue with an example.
So, ladies and gentlemen, as my team members have already told you that how we calculate uh, the gain or loss on public transport, I would like to explain you with an example that how you actually calculate the depreciation for these assets and also how you calculate the gain or loss on these. So here's an example that Ms. Praveen purchased a bus for public transport from Mr. Bashir for rupees 5 million in 2011. Some other expenses were also paid, including registration fee of rupees 120,000 and a government license fee of rupees 250,000. And Miss Parveen sold the bus in 2014 for 4 million. So now we have to calculate the depreciation for four respective years, 11, 12, 13, and 14. And in 2014, this asset was sold. So we also have to calculate the gain and loss on disposal. Moving on to the solution of this, first of all, the first step that you have to calculate is that the total cost that you will be using for the purpose of calculating the gain or loss on disposal. So, ladies and gentlemen, as the purchase price was 5 million, but some other expenses were also incurred, which are directly linked with the actually operation of the vehicle or the bus that will be used for the public transport. So we have to include that in the total cost as well. So 120,000 of registration fee and government license fee of 250,000 shall be added to the total cost, and then we will calculate the total cost of 5.67 million. Moving on, now we have to calculate the depreciation. As we have to calculate the depreciation, we have to first of all see that what is the cost that we are allowed to use for tax purposes. So our total cost was 5.375 million, but the tax authority only allowed us 2.5 million, as Maham already said before, that this is the obligation, this is the restriction given by the tax authorities to us. So on this basis, we will calculate the depreciation on 2.5 million. So normal depreciation, ladies and gentlemen, before I move on, I would like to ask you a question that who can tell me what is a normal depreciation percentage on an asset? Can anyone tell me, please?
Which asset are you referring to?
I'm talking about the normal depreciation rate per year that you can charge on an asset, on a vehicle.
On a vehicle, 15%.
Okay, thank you very much, Vedant.
You're
So,
welcome.
so I would like to carry on that by using the 15% for the normal depreciation, we can calculate the depreciation as 375,000, and then the closing written down value of 2.125 million will be calculated for year 2011. Same procedure is used, and the closing written down value will be the opening written down value in year 2012, and then we can again with the 15% the rate, we can calculate the closing written down value. So the closing written down value in 2012 was 1.806250 million, and in 2013 the closing written down value was 1.535313 million. So, ladies and gentlemen, before I move on, I would like to ask another question. If someone can tell me why isn't there any depreciation charge in year 2014? Can anyone tell me, please? Uh, Can I ask
Uh,
Rob? Anyone, please?
can I?
No, please.
Because
Someone else. Please, someone else, please.
good luck with
Can
it.
anyone? Can anyone else answer, please?
You
Can
may
you
name,
repeat your
Siddiqui, you
question,
may
Hamza?
name that person.
Okay, sir. Can Rabia, no, can you please?
Can you repeat your question, Hamza?
Yeah, my question is that why isn't there any depreciation in 2014?
I think because the asset was disposed of in that year.
Very well, that's absolutely right. So in the year of disposal, you cannot calculate the value of depreciation, so there will be no depreciation charge. Moving on to the next slide, we shall be calculating the gain or loss on disposal. So, ladies and gentlemen, as we have seen that we are only allowed 2.5 million as a total cost, and we cannot use our own cost. So, we also have to divide our sale proceeds into the respective proportion of the tax authority allowable cost and the cost that we have already accounted for in our accounting records. So, how we can do that is that as our total sale proceeds were 4 million, we multiply it with 2.5 million, which is the cost allowed by the tax authorities, and then we divide it by the cost that is our own cost in our accounting records, which is 5.37 million. And then that's how we can calculate the sale proceeds new value according to the proportionate of our tax authority and our cost. And the written down value is same as we calculated in 2013. It's carried forward over here. And like this, we can see that there is a gain of 3.25, 325,885,000 in 2014 on the sale of on the bus. So I hope we were able to make your concepts clear about this, and thank you. We thank you for listening to us. Thank you very much. Any questions, please?
I have a question.
Yes. Yes, Rabia.
Um, why don't we use fair value and why don't we use fair value and use written down value in case of disposal of exported assets?
The reason being that because
Can
this is
I,
okay. Yes.
Hamza, can I answer?
Yes. Yes, sure. Sure.
We don't use the fair market value and we use the written down value because it's a rule by tax authority and we have already used that value at the fair market value, that's why. And we are bound to use the written down value.
Okay,
I
thank
hope
you.
we are. Thank you. Anyone else?
So,
Any other questions?
I have a question for Hamza.
Yes.
So, what is the difference between written down value, book value, and fair market value?
A fair market value is a value that is actually the current prevailing market value that the asset is currently being, uh, priced in the market. And the written down value is the value that you calculate in your internal records by deducting the accumulated depreciation from your cost. And the book value is the same value that you account for in your accounting records.
Excellent.
Okay, I have a question from Ali Sheikh. Is Ali Sheikh there? Ali is not there. Taiba, are you listening to me?
Yes, sir.
Okay, my question is that how do we calculate sale consideration in case of a passenger transport vehicle? Hello?
सर क्या कह रहे हैं आपकी आवाज बीच में कट गई थी
How do we calculate the sale consideration of a passenger transport vehicle? What is the formula? Can anybody else explain this? How do we calculate the sale consideration in case of passenger transport vehicle? It was explained a short while ago by Siddiqui.
Sir, can I?
So you have taken your turn.
Thank you.
Anybody else? Okay, out of the team, Mispa, Abir, Maham, anyone else can explain this? How do we calculate the sale consideration in case of passenger transport vehicle? What is the formula?
So, hello.
Yeah,
Sir, the formula is A into B divided by C, where A is the disposal proceeds, B is the cost of asset, and C is the actual cost of asset.
B is the cost of asset. What does it mean?
Sir,
B is
the
the
cost
cost
is
of asset in terms of tax law, 2.5 million.